right, for the day's market movements and more broadly at investment strategy, Marcus Bogdan joining us from Blackmore Capital. Marcus, very good to talk to you on a Thursday morning. So we've been talking about obviously what's going on in the States at the moment. Some of those earnings results certainly beating the street, well, many of them, in fact, and that is leading to broader positivity among investors at the moment.
Good morning, Andrew. I think we've actually navigated very well over the last couple of weeks, and we've seen in Australia that we're actually seeing some positive upgrades in Australian earnings as well. We went through a very choppy period several weeks ago where we saw earnings expectations for FY22 reduced from around 15% to 10%, but still growth there. Announcements such as Brambles and their revenue strength was supportive of where the markets are today. And I think Australia is in a unique situation where we are going to be coming out of lockdowns. We are going to be opening up our borders. And I think that sets us up for a much better second half of FY22.
Yeah, we'll get stock specific in a moment, but do you feel as though, and we did have that pullback certainly which began in September, do you feel as though we're past that when we talk about, I guess, having climbed that wall of worry because there's still so many issues to consider? What's your outlook as we head towards the end of the year?
Well, there were certainly plenty of challenges, and there still are plenty of challenges around. The supply chain issues have not gone away. I think elevated expectations around inflation are still there. But I think all of that is now being absorbed and understood in the market. And as we get through these sort of more seasonally tough periods, particularly September and October, we lead ourselves into, primarily a stronger period for equity markets coming forward now.
All right. Now, you mentioned Brambles there just a moment ago. Excuse me. Now, obviously, this is an issue as far as supply chains. That's very much its space at the moment. So it's come off around 10% in the past 3 weeks.
Yes, it has. I mean, they had a strategy day where they indicated that this financial year would be really a year of an investment in their digital capability and an investment in automation. And so they did downgrade their earnings expectations by around 4%, whilst they maintained a revenue guidance of about 5 to 7%. But their first quarter update, which was released earlier this week, showed that there was 9% revenue growth. So still very strong demand, and remembering that Brambles faces in to those very large markets of the United States and Europe. So that was a very encouraging result. Last year, they did have a series of upgrades as they went through the year. So my sense is that reaction that we've had, a pullback of over 10% since that investor day, is overdone. And I do think that longer term, they are actually strengthening their franchise by building in digital capability and further automation. And so back at these levels, I do see that there is a semblance of value coming back into the stock.
Okay, so good buying opportunity right now.
Yes.
All right, good one. That is Brambles. You're also taking a look at CSL. Of course, it has had well-publicised problems during COVID, just as far as collection is concerned for its blood plasma. How are you looking at the company at the moment?
Well, we got a very good update earlier in this week. They had their R&D investor day. They spend around 10% of their revenue on R&D, or $1 billion per annum. And they are coming into a sweet spot in terms of new product launches over the next five years. And they potentially could be quite significant. CSL has had a strong history of innovation and product development. 5 years ago, new products now represent around 20% of the revenue base. So I think they whilst this year there is going to be a pause in growth, as you've outlined in terms of the delays in plasma collections, but those elements are now starting to improve quite consistently month on month, and we are now starting to see a recovery in supply, and underlying demand for plasma remains incredibly strong. So I think now you've had quite a pause in CSL's share price over the last year. It's underperformed the benchmark quite considerably. I do think that there are now the tenets now for long-term outperformance again, as this company returns to double-digit earnings growth from FY23 onwards.
And Marcus, so you were talking earlier there, just as far as where we're at, as far as cheap funding costs for M&A. I mean, that there's huge demand there at the moment. How are you looking at it? What are your expectations?
Well, I think that the M&A cycle has been robust, and I think it will continue to be well supported. Obviously, funding costs remain incredibly attractive, and I do think, and also company balance sheets are incredibly strong, particularly for Australian companies. PE firms are long cash. So my expectation is that this process will continue, and it will be, again, be strong underpinnings for the market going forward.
Marcus, good one. Thanks for joining us from Blackmore Capital.
Pleasure. Thank you.